Hey guys, Carl Rao here, the Lending Guru. Wanted to talk to you a little bit about this market and the sharp increase in rates. First of all, one of the things I do hate is that the market has programmed every buyer out there to be too rate conscious. There's this thing as being too intensely focused in on an interest rate. Normally, for us mortgage loan officers, we understand what that really means. What it really means is you want the most affordable payment or the lowest payment that you can possibly get, and your overall payment depends on a few things. One of those that depend on the payment amount is the interest rate, of course, but there are other things like the taxes that are included with the property that you're purchasing. It also depends on what the price or cost of homeowners insurance is, and also homeowners association fees, if any. So those are some things that can really affect your home payment, your monthly mortgage payment, a lot more than your interest rate. Guys, let's be honest. Interest rates are going to do what they do. We don't have much control over that. And to be honest with you, every lender out there is pretty much giving you the exact same market rate based off of your particular financial snapshot. There are about 40 different data points that decide what your interest rate is going to be, and that is totally dependent on your unique situation. So the shopping and trying to say if this lender is going to give you this or this lender is going to give you that, what you're really doing is risking getting a lower rate at the end of the day, because every time you do that, one of them has to pull your credit, and your credit score may subsequently drop. Although it won't drop immediately, it may, the longer it takes you to find a home, by the time that credit score drops in 30 days or 60 days, and that could affect your mortgage approval. So let's look at what really affects your payment more so than the interest rate. Like I said, interest rates are going to do what they do. We don't have much control over that. But we can look at your individual financial snapshot. And of course, the better or the higher your credit score, the better effect it's going to have on your interest rate. So let's make sure we keep those things in mind and not be so rate conscious that it makes us paralyzed in the decision to purchase a home. The time to purchase is always here and now. Guess what? Because we never know what's going to happen in the future. We don't know where home prices are going to go. We don't know where interest rates are going to go. The ideal is to get the best situation or the best scenario you can here and now and not wait. Once again, this is the Lending Guru. Take care. And that was the mortgage tip for the day. Thanks. Bye.